Hey everyone, it is Jay Soloff from Investors Alley with our trade of the week. So it's been another crazy week in the markets due to the coronavirus and the fears of what it will do to the global economy. So as you can see here in Market Chameleon, the unusual options page, once again, there is a ton of unusual options activity. That's what happens when the markets are basically in crisis. And a lot of it's going to be centered around the index type products, SPY, VXX with volatility, gold, and the one I'm going to look at here, which is HYG, which is the high yield corporate bond ETF. Now, high yield corporate bonds, otherwise known as junk bonds, they tend to have issues during times of uncertainty. The credit worthiness becomes a much bigger deal when you have to worry about a recession or lack of cash flow or things like that. So tends to be a time when investors will jump from high yield type bonds to more safe government bonds, things like that. And if you were to look at the government bonds, you would see that they're getting a whole ton of cash flow in there, or higher ETF prices on those sort of products. So no surprise there necessarily, but it's going to be interesting to see what sort of trades people are making. So we'll sort this by quantity and look at some of the bigger trades here. As you can see, a ton of action in HYG. Now HYG is a proxy for all kinds of stuff. High yield bonds, but that also works as like a credit sort of proxy, credit derivative spreads, that sort of thing that you may have heard back in the Great Recession. That market, probably people use HYG options as a way to hedge against that. So not surprising that there's this much action. Let's look for something that's maybe opening. And here's a good one. All right, so March 13th, which is at the time I'm recording this, it's only a week away, and HYG is up here in about 84.5, and you can see that the 80-75 put spread, so it looks like buying the 80, selling the 75, costs about 35 cents. Now, options, even in a crisis market, the high yield bond ETFs, they don't tend to move that much. They're pretty stable. So the fact that somebody's buying something that's almost $5 out of the money with a week to go is pretty crazy in itself. And they were willing to pay above market prices for it too, even though it wasn't a lot. 58 here, 23 on to sold on the put side to cover the cost to some extent. But that means they're only spending 35 cents on the trade. If it goes down there below 80, you could start making money all the way down to 75. So not a big risk, right? It's only even with 5,000 lot, it's only there in a 175,000 max risk on a 5,000 lot, when they can obviously make a lot more than that if it drops all the way to 75. The thing is though, is that, like I've said in the past or just recently, that this thing doesn't tend to move that much. So the fact that someone's even buying them this far out of the money with a week to go is pretty impressive. So taking a look at that here, and here is HYG, and you can see, this is a range from here about 85 up to 88. So really doesn't move all that much. But now all of a sudden, look at these huge moves. Big drops were down at a low, come back a little bit here to 85 at close. But this is people worrying about credit, and that's what happens when the market sells off. People are worried about a recession. You worry about getting paid. You worry about companies that are having credit issues. So not a huge surprise. Do we expect this to happen? Drop all the way down to 80 next week? Well, you never know in this environment. Probably not. But the fact that it's only costing 35 cents to make that bet is not a bad thing to do if you are worried about the credit markets melting down next week. It'd be an easy trade to set up. And it's about 7 days to go. It would be even cheaper next week. But you can see here, this is an opening trade. Here's the sell part. Here's the buy part. Just it's as simple as putting in a vertical spread, buying at the 80. We want the puts, buying at the 80, selling at the 75. The markets are wide because it's closed. It'll probably cost about 25 cents at this point. because the market is up about 50 cents from where that trade was made. But just an interesting, the fact that, again, that someone's even putting a trade like that on, could be a hedge, could be speculation, but the fact that someone's even putting that on is with a week to go and that size just goes to show you how worried people are about the market right now. You can even do high, you don't even want to cost you that much if you just, even if you bought like the at the money put is only $1.25 at this point. So interesting to see, a lot more volatile than it normally is, but will be interesting to see what happens with the high yield bonds and the market in general next week. I talk about this stuff all the time, or these sorts of trades and trading strategies in my various products. My entry-level product is a $49 product called Options Floor Trader Pro. There's a link to it on this page if you're interested.